right, so today we're going to be looking at Microsoft as an investment opportunity. Forget what you think you know. We're not just talking Windows or Office.
Yeah.
This is bigger. Think cloud computing, AI, and some serious competition.
Yeah.
We're going to break it all down. Their financials, strategic moves, and by the end, you'll have a solid understanding of their strengths, weaknesses, and whether they deserve a spot in your portfolio.
Exactly. We're going beyond just the products everyone knows and really dig into the numbers and strategies that are driving their value now and in the future.
Okay, so Microsoft, everyone knows them, right? A tech giant for decades. But I think what's really interesting is how they've adapted, evolved over time. They're not just a software company anymore. They're a major player in cloud computing with Azure, making big moves in AI, even shaking things up in the gaming world with their Xbox Game Pass and that Activision Blizzard acquisition.
Right, and they've really diversified their portfolio, expanded into those high-growth areas. And what's really striking is how they've integrated AI into almost every part of their business.
Yeah, it's fascinating. It's not just a buzzword for them. They're using AI to enhance their products, create entirely new solutions, and even address global issues like their AI skills initiative. It's reaching millions of people worldwide, making AI technology more accessible.
Exactly. They're investing heavily in a future where AI is at the core of how we work, how we live, and how we solve problems. But let's get into the numbers for a second. Their 2024 revenue was massive,
right?
$245.122 billion. To put that into perspective, that's bigger than the GDP of many countries.
Okay, so they're bringing in some serious cash, but how are they actually making that money?
Well, their revenue is divided into three main segments: productivity and business processes, intelligent cloud, and more personal computing.
Okay.
Productivity and business processes includes things like Office 365, LinkedIn, and Dynamics. Then you've got intelligent cloud, this is where Azure lives, along with their other cloud-based services. And finally, more personal computing, which covers Windows.Xbox and Surface devices.
So which segment is bringing in the big bucks?
The real star is intelligent cloud. It's their fastest growing segment. With a 20% year-over-year growth, it really shows where the momentum is. And looking at their latest financials, there are some interesting details there. For example, their acquisition of Activision Blizzard really impacted both gaming revenue and their R&D spending.
Yeah, makes sense. Huge acquisition. Clearly, they're betting big on gaming. But let's break down the revenue for each segment a bit further.
Their most recent quarterly report showed revenue of $28.317 billion for productivity and business processes, a 12% increase year over year. Intelligent Cloud brought in $24.092 billion for the quarter, reflecting that impressive 20% growth we talked about. And more personal computing, their most mature segment, still achieves 17% growth with $13.176 billion in revenue.
Wow, so all three segments are showing growth. But Intelligent Cloud is clearly leading the pack. Now, revenue is important, of course. But what about profitability? Are they actually making money?
Well, their income statement does show consistent profitability, however. They are facing some increased expenses. The Activision Blizzard acquisition was a major investment. And they're also pouring resources into AI research and development.
Right.
A key point for investors to consider. They're spending a lot to stay ahead of the curve.
For sure. But are they spending wisely? That's the million-dollar question.
Yeah.
All right, so we've looked at their financials. Seems like they're in a pretty solid position. But let's move beyond the numbers for a bit and talk about their overall strategy. What's the game plan of the future?
Well, their strategy is centered around AI. It's not just about integrating AI into their existing products, although they're doing that effectively. With things like the AI-powered Copilot for Microsoft 365, they're building entirely new solutions around AI, like Microsoft Fabric, their unified analytics platform.
I see. So they're not just playing defense. They're actively shaping the future of AI, creating new markets in the process.
Exactly. And it's not just about profit for them. They're committed to using AI to address global challenges like climate change and empowering people around the world. Their sustainability efforts are impressive. They're aiming to be carbon negative, water positive, and zero waste. And AI is a crucial part of achieving those goals.
I find that really compelling about them. They're not just a tech company, they have a vision for a better future. But let's be real, the tech world is fiercely competitive. Who are they up against, and how are they staying ahead?
The cloud market is a battleground, and their biggest rival is Amazon Web Services. AWS still holds the lead, but Microsoft Azure is closing that gap, especially with their focus on hybrid cloud solutions, allowing businesses to blend on-premise infrastructure with the cloud.
So they're not just trying to replace existing systems, they're providing those flexible solutions.
Absolutely. And of course, there's Google, another major player in both cloud and AI. They're both investing heavily in these areas, constantly pushing the boundaries.
Like a tech arms race out there.
In a way it is, but it's not just about raw computing power. It's about innovation, user experience, and building that ecosystem of partners and developers, and Microsoft is doing well on all those fronts.
All right, so they've got the financials, the strategy. They're holding their own against some tough competition. But what does it all mean for investors? What's the bottom line here?
That's what we'll dive into next. We'll look at their investment potential, the risks involved, and how analysts are valuing this tech giant.
Sounds good. But first, a quick word from our sponsors. Stay tuned. We'll be right back.
Welcome back. So let's jump right back into our analysis of Microsoft as an investment.
All right, so we left off talking about the competitive landscape. It's a jungle out there. But while Microsoft seems to be doing well, are there any specific challenges or weaknesses that we should be aware of?
Well, one thing that stands out is the potential for regulatory hurdles. Data privacy is a major concern these days, and Microsoft has faced scrutiny in this area, particularly with LinkedIn's targeted advertising practices. Remember that Irish Data Protection Commission investigation?
All right, a valid concern for sure. Any other red flags for investors?
Another thing to consider is their dependence on a few key products and markets. While they have diversified, a significant portion of their revenue still comes from Windows, Office, and Azure. If any of those markets were to take a hit, it could impact their bottom line.
So diversification is good, but over-reliance on a few key areas could be risky. Makes sense. Now let's shift gears a bit and talk about their investment potential. We've seen they're financially strong, making strategic moves in those key growth areas, holding their own against the competition. But how does all this translate into actual investment value?
Well, one way to assess that is to look at how analysts are valuing them. One common method is the discounted cash flow model, the DCF model.
Yes, the DCF. I've heard of it, but I'm not exactly a financial whiz. Can you break it down for me and for our listeners who might not be familiar?
Of course. The DCF model essentially projects future cash flows and discounts them back to their present value. The idea is to estimate the intrinsic value of the company based on its future earnings potential.
Okay, so it's all about predicting the future, which is never easy. What factors do analysts consider when making those projections?
They look at a variety of factors: projected revenue growth, profitability margins, the discount rate, which reflects the time value of money, and the terminal value, which represents the company's value at the end of the forecast period.
It's a lot of number crunching involved.
Yeah.
But for someone considering investing in Microsoft, how do these valuations actually translate into real-world decisions?
Well, if the DCF model suggests the company's intrinsic value is higher than its current market price, it could indicate the stock is undervalued, and that's a good buying opportunity. Conversely, if it suggests the stock is overvalued, it might be a signal to hold off or even consider selling.
So it's a tool to help investors make informed decisions.
Yeah.
But it's not a guarantee of future returns, right?
Exactly. No model can perfectly predict the future. Investing always involves some level of risk. But the DCF model, along with other valuation methods and careful analysis of the financials and strategic direction, can definitely help investors make more informed decisions.
Got it. So we've talked about the DCF model. Are there any other valuation methods that analysts use for a company like Microsoft?
Another one that's often considered is the tangible book value.
Okay, I've heard of book value, but what makes it tangible?
Tangible book value specifically focuses on the net worth of a company's physical assets, things like property, equipment, and inventory. It excludes intangible assets like goodwill and intellectual property.
So a more concrete measure of what the company actually owns. How is that useful for investors?
It provides a different perspective on valuation by comparing the tangible book value to the company's market capitalization. Investors can get a sense of whether the market is valuing those tangible assets appropriately.
Interesting. Okay, so we've covered a lot. Financials, strategy, competitive landscape, and even some valuation methods. What's your overall take on Microsoft as an investment? Are they a buy, a hold, or a sell?
Well, I can't give specific investment advice, but I can say Microsoft has a long history of innovation and a proven track record of success. They're well-positioned in key growth markets, and they're making strategic investments that could have a big payoff in the future.
But of course, they also face those challenges we talked about, like regulatory scrutiny and the risk of being too reliant on certain products and markets.
Exactly. It's a balancing act. As with any investment, it's important to weigh the potential rewards against the risks and make decisions that align with your own investment goals and risk tolerance.
Okay, so it's not a slam dunk.
Yeah.
But I guess that's what makes investing interesting, right?
Yeah.
Analyzing the information, assessing the risks,
Yeah.
and making those informed decisions.
Exactly. And speaking of information, there's one more thing I want to touch on before we wrap up. We've talked about their current performance, their future potential. But what about their commitment to returning value to shareholders?
Yes. The all-important question for investors.
Yeah.
What's in it for me?
Well, Microsoft has a robust share buyback program, and they've consistently increased their dividends over the years.
So they're putting their money where their mouth is, so to speak. Not just talking about growth and innovation, but actively sharing their success with their investors.
Exactly. And those actions can signal confidence from the company itself, which is a positive indicator for investors.
Right. It shows they believe in their own future.
Right.
So as we start to wrap up this deep dive into Microsoft, what are some key takeaways for our listeners?
I'd say we've seen Microsoft as a financially strong company with a proven track record. They're strategically positioned in key growth markets like cloud computing and AI. And they're committed to returning value to shareholders through dividends and buybacks.
But they do face challenges as well from competitors, regulatory scrutiny, and just the inherent risks of operating in a rapidly changing world.
Exactly. It's crucial to weigh all of these factors carefully. Do your own research before making any investment decisions.
Absolutely. The information we've discussed here is just a starting point. It's essential to stay informed, follow the latest developments, and be ready to adapt your strategy as needed. The tech world moves fast, and companies that can anticipate those changes are the ones that succeed.
That's an excellent point. As you continue to research Microsoft, ask yourself, are they just maintaining their current position, or are they actively shaping the future? That's a key question to ask when evaluating any potential investment.
I love that question. It reminds us that investing isn't just about numbers. It's about understanding the bigger picture, the trends that are shaping the world.
Precisely. So keep that in mind as you learn more about Microsoft.
So we've really dissected everything: financials, their strategy, competition. What's the final verdict? Is Microsoft a solid investment?
You know, let's zoom out for a second. Look at the big picture. Microsoft isn't just riding the wave of tech trends. They're actively shaping them. Their investments in areas like mixed reality, quantum computing, even the metaverse, these could be game changers.
It's like they're playing 3D chess while everyone else is stuck on checkers.
Exactly. These are long-term bets, of course. No guarantee they'll all pay off. But the potential upside is enormous. If even one of these ventures takes off, it could really launch them to a whole new level.
So for investors, it's about balancing that short-term potential with those long-term bets.
Exactly. If you're looking for a quick return, Microsoft might not be the best fit.
Nice.
But you're looking for a company with a solid foundation, a vision for the future, and a proven track record of innovation, then Microsoft is definitely worth considering.
It's almost like investing in a diversified portfolio, but of cutting-edge technology.
I like that analogy. You're not just buying into their current products and services, you're investing in their ability to adapt, evolve, and create the future.
And let's not forget their commitment to shareholder value. Those dividends and buybacks, they're a real tangible benefit.
Absolutely. It shows they're committed to sharing their success with their shareholders.
So as we wrap up our look at Microsoft, what's the one key takeaway that you want our listeners to remember?
I'd say this: Microsoft is a company at the forefront of innovation. They're not just riding the wave, they're creating it. But as with any investment, do your own research, understand the risks and rewards, and make sure your decisions align with your own investment goals and risk tolerance.
Couldn't have said it better myself. And remember, everyone, the world of tech is always changing. Stay informed, stay curious, and never stop learning.
The best advice anyone can give.
Well, thanks for joining us on this deep dive into Microsoft. Hope you found it insightful.
It's been a pleasure.
Until next time, happy investing, everyone.